Joining us, Michael Saylor, MicroStrategy Executive Chairman. You never stop adding to the position of your company, and you have a lot of courage because there's been a lot of major swings in the past. And there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that, but it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high-performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent,
right,
buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made? Right now, I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious sort of what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing, and it's created more demand. But you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1, and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this? You know, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year, every year. And you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.